Good afternoon, San Diego. How are you? If you have not noticed, I do not have an accent, and I am not Ron. He could not make it today, but I'm going to be filling in. My name is Chris McCullough, and we're still going to hold true to what Ron does. We're going to be talking about how to protect you, the consumer, and today's topic happens to be on predatory lending. Predatory lending. I got some great experts in here with me today. One of them, Josh Craven with Sprint Funding. We got Randy Van Orden with Freedom Mortgage, and Steve Christian with Freedom Mortgage as well. How is everybody?
Doing fantastic.
Doing great.
Great, guys. I'm glad you can make it. It was kind of short notice. Ron couldn't make it, so I stepped in, and, I've sat in on a couple of his shows. I absolutely love that guy. I mean, he is fantastic. I know a couple of you listen to him as well, and when I really started trying to put together this show, I was thinking, what would he want to talk about? How, and he's always looking out for the consumer and how he can protect people. And I tell you, I just ran into a situation. I'm a real estate agent. I'm also a real estate investor. I've owned my investments business for about 18 years. And I've seen this over and over and over. And sure enough, one of our past clients, in my opinion, just got took by a lender, a predatory lender. And ultimately, I think most people have no idea how to protect themselves because they really don't even realize the angles that are out there and how they actually get took. So let's sit down. Let's talk about this a little bit today. I'm so glad that you guys can make it on short notice because I know each one of you individually. I believe you are the actual experts when it comes to lending, and I'm blessed to have you. So thank you for that, first off. So let's go ahead and get started. The one thing, when I started reaching out to a lot of the people online, because I'm huge on social media, and I started asking people, what do they think about predatory lending, or what's the first thing that comes to mind? Everything that everybody said is, it was because of predatory lending, that's what created the real estate crash. That's what created the crash in '07. And I have my view on that. I personally believe it was just one of many things, but I mean, you guys are the experts. Do you believe lending was the number one reason that created the crash when we had it?
Oh, absolutely not.
Yeah, I don't believe that's the sole reason that the crash was.
Okay, so a lot of the people that I've talked to, they say, well, because of the subprimes and all these other things, bad lending, loose lending, and allowing any guy, because I think what was it? It was you're a waiter, you were working, and all of a sudden, even though you were only making maybe $10 an hour, now you're making $10,000 per month. So you know what? Give them a house. Not a big deal. So tell me, what do you think happened with the lending during the crash?
Well, I think what happened is human nature, they took advantage of the situation, and not only did they take advantage of it, but it was easy to take advantage of because the lending criteria, the guidelines, they got loose, and it was easier to qualify. So, unfortunately, you're going to get lenders out there, you're going to get people out there that are going to take advantage of it, and like you just mentioned, still do, even
right.
with our check balances that are in place now. That have always been in place, and as far as in my opinion, they have been in place. Yeah, they're more noticeable now. So with the Frank Dodd and so on and so on.
Yeah, and Frank Dodd, we'll definitely talk about that a little bit. But I think what I'm kind of leading towards is you have this situation at the time, right before the crash, where everybody and anybody could get a loan. And then all of a sudden, everybody's wondering, why is everybody getting foreclosed on? So I'm kind of curious, you just said it, they were taking advantage and they were just putting it out there. But were these regulations that were put in place that allowed people to be taken advantage of? Was it a government oversight? Was it individuals? Because it was prevalent, especially in this market in San Diego. When you look at the price of a home, it is not, you're not going out and buying a house for $100,000.
Yeah. You could definitely get what you want without a lot of restrictions. And I think that alone, everybody fed on it, whether it was an organization, whether it was the consumer. You could get what you want without a lot of restrictions.
Right.
And so now that leads to creativity. Well, what do I want? What can I get?
I think creative financing is going to be a huge part of the real estate market if we stay where we are, and it's funny because, so you all can't see this because it's on the radio, but people are starting to nod their heads. If inventory doesn't adjust, meaning if more homes don't come on the market, if more builders don't start building homes or people don't start selling homes, right now I believe we have an artificially injected increase in value. It's fake. It's monopoly money because there's no inventory. And in turn, lenders are going to have to eventually become more creative in order to get people to buy homes. You're talking about a major portion of our GDP. a major portion of the gross domestic product in this country. And if something doesn't happen, I think it's going to be a challenge. So what's going to keep us from going back to where we were?
Well, creativity can be scary depending on how loose we get with the guidelines. I mean, we could very well open up the door to 2008 if we get that creative.
Right.
So with any solution, I think personal responsibility needs to,
Well, we were
be a
talking
big
about
part.
that. So somebody said when we were just talking a few minutes ago, they're like, well, it's the consumer's responsibility. So tell me, what is the responsibility of the consumer? Because it's going to kind of lead me into something here in a second. What is it?
Budget driven. I mean, that's important.
Okay.
I think the biggest responsibility a consumer has is to go with somebody they feel they can trust, number one. Number two, they have to ask questions. If they're not going to read some of the documentation or all of it,
Absolutely.
I don't expect them to read it all because it is a lot. They need to ask questions. And if they don't understand something, they need to keep asking questions until it's clear.
Right. I can buy that to a point. So I agree with you. I think it is the consumer's responsibility. And that's why I think it's important to talk about this on air. I'm hoping to educate somebody, even if it's just one person. And we're going to talk about, like I said, one of our past clients who got took recently. I believe it's a responsibility to sit down and read their articles and what they're signing their lives away to on the lending. But even with all the wording, and we all know this, with all the wording and all the stuff that's actually in there, it is pretty overwhelming, especially if you don't do this for a living. So, I mean, if it's their responsibility, I personally believe that there needs to be a way to educate individuals. And then if there is a way to educate them, whose responsibility is it, or whose responsibility should it be?
I think at the end of the day, there's got to be a net benefit to the consumer, and the underwriters are responsible to make sure that the loan that's being written has a net benefit based on what current loan they have or the scenario that they're in. The issues that happened before were non-QM, non-qualified mortgage product. When I first got in this business in '86, you had to actually prove that you could pay off the loan over time. And what shifted was some changes in the way that they were selling and monetizing the paper on the back end, and investors jumping in, and that's what changed. And when that happened, they couldn't get enough people. All it was is they were selling the product on the back end, so they were trying to make it as easy as possible for people to get in on the front end, so the large banks could monetize the money.
So let's go ahead, because I have a lot to say. So now you guys know in my soul, I'm an investor, and I love note investing. So now we're starting to get into an area where I think is the true core of some of these challenges. So
I think also, to add to what Steve just said, is that I think they needed more loans to sell them on the mortgage-backed securities. I think they were running out of AAA loans.
Okay, so for the people that are listening right now, you may not understand what we're getting ready to get into or what we're even talking about. So let's talk about that. So I know when I was talking to you on the phone, Steve, earlier, what a lot of people don't realize is that when a loan officer does a loan for them, that loan is usually sold on the back end. Big banks, they leverage a lot of the loans that are made out there to a pretty astounding amount of money that they can either lend out or leverage or invest into stock.
It's called the banker's secret.
There we go.
So what happened is post World War II, I think it was. I'm not that old, so you're going to have to give me some slack. But the government came back and said, hey, we have a lot of veterans and they all want to start buying houses and affording the American dream. So what can we do? And they went to the banks. Well, at that time, the banks would loan. It was a straight note. You paid just like buying a car, but you did it for 5 years. Well, the bankers came back, and again, this is all getting Wall Street back. They came back with, here's what we'll do, is we'll give them a 15-year and 20-year notes and 30-year mortgages they were pushing for. That came after. We'll give them a longer term, but we want all of our interest up front. So if you look at that, 89 cents on every dollar goes towards interest, and it's all front loaded. That's why servicing a note is a saleable product, because people make a lot of money. Well, when you create that vehicle for an investor, and then you start then the economy's going good and everybody's doing well, and they're bringing out new products, and at the same time, Wall Street is packaging these and calling them AAA, and they're putting these subprime and high FICO score products, and they're saying, hey, these are AAA, and putting them with qualified mortgages. All of a sudden, anybody who wants to get a house can. It's not fair to the guy who's qualifying with, full tax returns. He saved a down payment. He bought a home, because the values, again, are falsely inflated, like it is now with the subsidized interest rates. Right. The values are inflating based on anybody and everybody who's qualifying at a stated income, which stated in definition is fraud. Right. They're buying with stated income with a high FICO score and just saying what they make, and buying it based on a 1% interest rate, which was an ARM product. Right. So all of that combined created, people who were saving and buying and getting into the home market. They were paying too much for the home. Right. Well, I'll tell you what. So we actually got to take a quick break because, we got to pay the bills. Everybody's driving around listening to this. Well, if there's nobody paying for these, for us to be on the air, you wouldn't be getting all this great information. So let's get back to that topic once we come back from this commercial break. And everybody else, hold on, because we're about to take a great ride.
Ty-Court Title of San Diego is the next generation of title companies. They offer their clients the most complete real estate services in the nation. They have 4 convenient locations in the greater San Diego area to service all your residential and commercial transactions. Ty-Court Title of San Diego offers you title and escrow solutions. Whether you are buying, selling, or refinancing, they have you covered. With over a century of experience, you can count on Ty-Court Title of San Diego. They have a solid history of servicing customers with high integrity, white glove service, and value. They also have unrivaled financial strength to back your policies. For all your real estate transactions, call Ty-Court Title of San Diego today at 619-260-5200.
Alliance Escrow, the most reliable and hardworking escrow team in San Diego. Buying, selling, or refinancing a home can be a stressful event, and our friendly staff here at Alliance is ready to make your home buying or selling process as smooth as possible. We strive for outstanding customer service and are very dedicated to giving top quality service to each and every sale. Alliance Escrow will provide a special discount to active and reserve service members and disabled or retired veterans as well. Whether it's residential, commercial, bulk business, or refinance, call Alliance Escrow today and let us help you close your deal as seamlessly as possible. Call 619-609-0015 or go to www.allianceescrowinc.com today. That's 619-609-0015 or www.allianceescrowinc.com. Alliance Escrow, your partners in real estate.
Go to Fuller Honda, where they exceed your expectations from test drive to delivery. Their professional sales team is committed to a no-pressure, high-integrity approach to your ownership experience. Best of all, the new Honda lineup features some of the best fuel economy on the market, along with contemporary styling at affordable prices. The Fuller family has been servicing San Diegans' automotive needs for over 60 years. Fuller Honda, exit Auto Park Drive off the 805 freeway in the Chula Vista Auto Park.
Golick, other wireless providers say they will cut your bill in half, but who knows what kind of coverage you're going to get.
When you switch to Straight Talk Wireless, you get nationwide coverage on America's largest, most dependable 4G LTE networks and still save on your wireless bill every month.
You get the unlimited plan for just $45 a month. No contracts, no credit checks, no mystery fees.
And get this, with Straight Talk's Bring Your Own Phone plan, you can keep your phone, your number, and even your network when you switch.
Straight Talk Wireless. Best phones, best networks, half the cost.
Wood look tile shouldn't be one look tile. That's why at the Home Depot, you get a whole selection. And new Montana 4x28-inch planks start at just $269 a square foot. Longer lengths, narrower widths, and more natural colors mean you can create striking wood look patterns in any room in your house, even ones where you'd never put real wood. Montana wood look tile and new 4x28-inch planks starting at $269 a square foot, exclusively at the Home Depot. More saving, more doing, while supplies last.
The INE is much more than just the office that's in charge of the elections, and more than the credential that allows you to vote and identify yourself. The INE also exists to guarantee your political electoral rights and to defend everyone's power no matter the age. It's also a place for your opinion to be heard, to promote dialogue, tolerance, and respect, and to discover and share your citizen power. With you, Mexico is more. Join National Electoral Institute. INE. The Secretary of Public Education invites institutions of the educational, scientific, and technological area to propose candidates for the National Science Prize, which acknowledges the merits of Mexicans that have contributed in a significant way to generate scientific knowledge and technological advances. Register entrance by August 8th, 2016. Get to know the details at gob.mx/SCP. Secretary of Public Education. This program is public, unrelated to any political party, and shall not be used for purposes other than stated in the program.
Okay, folks, we are back. I'm pretty excited about this. If you listen into the last segment, you know that we're talking about predatory lending. We're trying to look at right now, kind of the past and what led up to it. But honestly, if you have been listening, you can tell that it's starting to get complicated. It is going to get more complicated. And we were just sort of talking off air here while the commercial was running that, this is some of these topics, they're all individual topics that we could talk about for hours, absolute hours. But unfortunately, we don't have enough time to do that. So what we're going to do is try to give you the biggest core pieces of this so that you could walk away, do some educating yourself, and or even reach out to one of the guests that are on today. And at the end of this, we'll go ahead and put out their information so you can get some more education yourself as a consumer. So right before we went off, we started talking about the secondary market. And basically somebody purchases a home. It started creating a commodity that could actually be bought and sold and adjusted. And therefore, when you create a product, things can tend to get a little loose because people are going to push it as much as they can in order to make a profit. I mean, that's kind of,
They want more.
They want more. Mm-hmm. They want more. So from that time to now, what's changed?
A lot has changed. We've gone back to qualified mortgages.
So basically, they got rid of it.
They got rid of the product altogether because it ultimately was a predatory lending product, but not just predatory on the individual. Ultimately, people lost their homes, but it was also predatory on the banks and everybody else. I mean, as you can see, our entire financial market collapsed because of that product.
Right. Do you think, and I've always been curious about this, do you think it was the original intention, or even intention in general, was that it was predatory? Because I think a lot changed.
I think everybody showed up to the party and they all were drinking and having a good time.
Right. And
everybody kind of knew it wasn't a good idea to drive home, but
right. But they got on the road all the same.
Yeah, I don't think that was what they thought when they brought those products out. Mm-hmm. They wanted to let more people realize the American dream.
Right.
And in order to do that, they
fudged.
I don't know if they fudged. They just made it easy. I mean, because when I started in this industry, I had to collect everything.
Right.
This was back in 94, 95. I had to collect everything, tax returns. And if they didn't qualify with those tax returns, I couldn't get them a loan.
Right.
And then I could have a doctor or an attorney that could probably have the money to pay for the house 2 times over, but he wanted a loan because he needed a write-off or whatever the reason is.
Yeah, whatever it is.
And I couldn't qualify because his tax returns reflected very little income.
Right. Yeah, the middle income and the self-employed are the ones who are suffering the most because of losing a product that was actually designed for that individual. Now, they if they want to be a little more aggressive and take advantage of some of the tax laws that we currently have at hand, so they don't end up paying most of their 50% of their income taxes, they can't.
I used to tell people, I said, Uncle Sam's going to let you have it one way or the other. You're going to either pay all your taxes, okay,
right,
and then you're going to be able to qualify because you're going to pay. You're not going to write everything off, or you're going to write everything off and you're going to have very little income and. So you get the benefit of the tax write-off, but I'm not going to be able to qualify you for a loan.
Right.
Well, and I think there's a belief that you couldn't lose in real estate.
Yes.
I think that was the principle at play. And even though real estate's a great investment, you can lose.
Right.
And a lot of people lost.
And that's what I was going to talk to. So when I said fudge earlier, I think the way I view it, I'm viewing it from an investor's eyes. Mm-hmm. And if I look at the big picture of what happened and what was going on, and to get into even right now, QE3, for those of you listening, if you don't know what it is, you really should Google it, because it basically is an artificial injection into the market in order to prop up our entire economy That's the best way I could put it, to prop up our entire economy, because at the end of the day, if you treat it just like your household, at the end of the day, if I keep borrowing money, and I have to pay on those loans every month, and I can't pay, and I have to keep borrowing money in order to pay those loans, and I create an artificial injection, which is fake money, in order to continue to, but again, my income is not changing, but my debt is rising. Well, we have a problem. And I think that's where when I said fudge from an investor standpoint, I think you're 100%, Josh. People were looking at it from the standpoint that, it's just, we want to buy houses, we want to do this, you can't lose in real estate. I could buy it today, I could sell it. And I know investors that were doing this. They would buy a house, they would hold out for 3 months, turn around and sell it for a $30,000 to $50,000 return. It was insane.
And I think it's important to note that people that could afford maybe the bad mortgage they had and made it through this and kept their home, they didn't lose. So real estate, at the end of the day, ended up being a good investment, but you had to be able to afford the mortgage that you had.
And nothing's changed. Nothing's changed
long term.
Yeah. It is. It's long term. Well, I was just on a TV show and we were talking about that, and they said, well, is now a bad time? A lot of people think it's a bad time to buy, and I'm like, are you serious? Look, if you view real estate, your house, so let's just say a person's house, as an asset and as an investment, and you don't purchase something, it's beautiful, I love it, I'm going to overpay, and the lender, is going to walk you down the path to buy it, and they want you to close. The real estate agent's going to walk you down the path. Now, if it were me and I was your agent, I wouldn't do that, because I'm going to say, look, how much can you afford?
Exactly.
Especially if you're a younger person, if you're under the age of 65 or 70, you should not be buying in because you love it. You're looking at the next 5, 10, 15, 20 years down the road, and you're buying it because it is an investment, it's an asset, and you can afford it. And I believe that the people that bought that could afford it before the crash, they still made out okay. But it's the other people that fudge numbers, whether it's the lenders, whether it's the lending practices, or even the consumer, because ultimately I think a lot of this is the consumer's responsibility.
Yeah,
it is.
They thought they weren't going to lose. Yeah. And what happened? A lot of people lost.
Well, they played a game they didn't know the rules.
They weren't qualified.
Yeah,
that's right.
They weren't qualified to play.
So what's changed? Ultimately, what's changed now? What fixes came into play? Did the government step in? I know we mentioned briefly they took away some of the products, but really, what changed?
Well, Frank Dodd stepped in.
There we go, Frank Dodd.
Everyone's
I
hand
said
got
it before.
forced.
Yeah, it just government stepped in a big way, and I don't think they really they changed a few things. It could have been a lot of things, but really it was stuff that was already in place. Mm-hmm. Some of the forms that we now have, they consolidate them. Same forms, they just consolidate them. And I think they've always been there. But now, because of everybody got involved in this crash, they are really looking at everything. And I think, too, still, even to this day, I think there are some lenders that are afraid because how are they interpreting the new law? Right. Because I don't even think the lawmakers who wrote them really know exactly.
I don't think they have any clue. In my opinion, I don't think they have any clue.
I think they're just afraid to really take that step, because if they take a step, a lender, whoever it may be, and it's just outside of that the guideline or whatever, but they think it is within the guideline, the fines are hefty. Right. And they don't want to do that. Right. They don't want a chance paying millions of dollars for fines or losing their license.
So Dodd-Frank, we'll go around the board. Josh, what do you think of Dodd-Frank?
I mean, overall, I'm really fine with the changes. I think it's become a safer environment for lending, which makes it an even playing field. And so we can have real conversations with clients, and the ones that can afford and want to buy a home, they can buy one.
Dodd-Frank.
I agree with Josh. I totally agree with him. And what it has helped do is eliminate some of the part-time loan officers, mortgage bankers that don't know what they're doing.
I know there's a lot of lenders that hate it. That's why I'm kind of curious to hear what you guys say. Because I think, Randy, Josh, Steve, you guys are professionals in my eyes. So
been doing it for a long time. I could roll with it. I think it got rid of a lot of the people that thought, oh my gosh, I can make a lot of money doing loans, because they've heard that. Right. And it got rid of those guys, those people.
There was a lot of things behind the Dodd-Frank that focused on the wrong problem, which was the broker or the loan officer up front, when there was a lot of bigger problems in the back. But all in all, I think the Dodd-Frank, the way that it's written, there's some things that take common sense out of lending, which isn't the greatest. But other than that, I think the Dodd-Frank is a good safeguard because it makes people accountable. But I think the other thing that makes people accountable, which I don't understand why licensing wasn't required in the past. Real estate agent has to have
I didn't
a license.
know that. Are you serious?
Why did they? Well, they had a broker's license, but they didn't have a specific financial license, which, the tested.
The real estate license was a huge umbrella that covered us.
Right,
that
I knew
covered
that.
loan officers.
Yeah.
So,
but when you get into specific licensing for the NMLS licensing as a loan officer, it's fairly intense.
Well, it's a profession, and no different than being a real estate agent, real estate broker. Or
and
any
it
other
weeded out a
profession.
lot of unprofessional people, which is great. Although you still don't have to have a license if you work for a bank.
Right. Oh, okay. See, I didn't know that either. That's interesting. But I know as loan officers, and I've seen, I have a buddy of mine who just recently started trying to, become a loan officer, got his license, everything else. And it's almost sort of like being a real estate agent where, not saying all people that have been in this forever are good, but, there's kind of a learning curve and a learning process, and you kind of almost have to apprentice under people in order to become productive and successful. And it's almost like if you survive, for a while, then you actually have created some staying power. What I want to talk about when we come back, because we're going to have to take another commercial here in a second, I want to kind of go back to Dodd-Frank briefly. And this show really is about the consumer. What should they know? What should they be researching and studying? They heard what you think it's great, but what does that mean to them? Most of these people are listening like, what is Dodd-Frank? First off, go and Google it. Second off, for us in here, I think it's our responsibility to kind of talk to that briefly and give them some guidance. What should they be educating themselves with so they can, intelligently know what's in their favor, what is predatory, what is out there to protect them, how is this affecting them and their mortgages, and even people that have had mortgages for a very long time that are thinking about refinancing. What could they do to move forward?
I have a super simple mathematical equation that I can give everybody.
Yeah, give it to me real quick. We can do it right now. If it's simple and quick, let's do it.
Well, basically, when they're looking at net benefit for them when they're looking to do a refinance, is take how many months, because when I told you earlier that your loan is front loaded, that means that it's not until on a 30-year mortgage, it's not until year 25 that 50% of it goes towards principal and 50% still goes towards interest. So most of what you're paying in the early days of that loan is interest. So add up what that is. Take those numbers into account when you're looking at refinancing back to a 30-year note or a 30-year mortgage and seeing if that makes sense. Sometimes it's better if you've been in a loan for a while. It's okay to pay a little bit higher in the interest rate. I mean, you don't have to go for a lower interest rate to get a lower payment if net benefit is going to cost you 5 more years of paying the larger mortgage.
Right.
To add to that, or you could consider, instead of a new 30-year, if you've already had it for 5 years, go with a 25 or a 20-year. And think about that.
Yeah, absolutely. And I think this is interesting because this is going to lead to probably our last topic, but people within the first 6 months wanting to go out and try to refinance or adjust their loan. And that to me, that's wild. And I remember, I'm not going to name the big bank, but I had a big bank a while back, and I was in the Marine Corps. I retired as a Marine. I had a loan, and every 6 months they called me. Hey, you want to refinance? You can do that with the VA loan. Hey, it's been 6 months. You can refinance with a VA loan. And I would like to know, is that even beneficial? Now, I know the math, and I sat down and did the math myself, and they thought, oh, well, you don't even know what you're walking away from. I was like, yeah, I do. I know exactly what I'm walking away from. It is not beneficial for me to do it every 6 months when I know that you're tacking on X number of dollars, plus we're readjusting to where my mortgage is going to be, plus it just keeps going. There's a ton of built-in fees, and to me, that in itself is also predatory.
Net benefit on the banking side isn't as I would say as all-encompassing as if you were an investor and you look at dollars for cents, what we're just talking about right now. Absolutely not, because net benefit, they're saying, okay, they're saving X percentage in monthly payment, but that doesn't count for the fact that you're going to add 5 years to your loan.
Yeah, I think a lot of the consumers look at only which they got to look past this, is what is my interest rate? That's usually the first question we get. What's the interest rate?
What's the interest rate and how much do I have to pay?
And that doesn't matter.
It doesn't really matter because
matter.
if you're lowering your interest rate, but you're only saving $10 or $25, is it really worth it?
Right.
They have to look at it and do the math, but they think, oh, I got 3.5 or 3%.
I've turned people away who are saving, $400-$500. And I said, somebody's trying to put you into you have 15 years left on your mortgage. They're trying to put you in a 30-year mortgage so that you can save monthly. I said, that's not a good plan.
No, you're going to get took. You're absolutely going to get took.
I'm 50 now. I look back and I say 15 years wasn't that long ago.
Yeah, it goes quick. And, it's wild to me because, and I guess the simplest way I could frame it is almost like the overdraft protection that you see at a bank. Well, if you go over, then, you just pay this little sum and this little fee and and we'll take care of you. That's, in my opinion, predatory as well.
Yep.
They make billions of dollars every year from people leveraging the overdraft protection plan. They make billions just on the fees. So we're going to talk a little bit about that again, and then we're going to move into a couple other topics I want to talk to. So let's go ahead and move to some commercials. Let's pay the bills. Thank you, everybody. Keep listening in. We got a ton more information for you.
Alliance Escrow, the most reliable and hardworking escrow team in San Diego. Buying, selling, or refinancing a home can be a stressful event, and our friendly staff here at Alliance is ready to make your home buying or selling process as smooth as possible. We strive for outstanding customer service and are very dedicated to giving top quality service to each and every sale. Alliance Escrow will provide a special discount to active and reserve service members and disabled or retired veterans as well. Whether it's residential, commercial, bulk business, or refinance, call Alliance Escrow today and let us help you close your deal as seamlessly as possible. Call 619-609-0015 or go to www.allianceescrowinc.com today. That's 619-609-0015 or www.allianceescrowinc.com. Alliance Escrow, your partners in real estate.
Ty Court Title of San Diego is the next generation of title companies. They offer their clients the most complete real estate services in the nation. They have 4 convenient locations in the greater San Diego area to service all your residential and commercial transactions. Ty Court Title of San Diego offers you title and escrow solutions. Whether you are buying, selling, or refinancing, they have you covered. With over a century of experience, you can count on Ty Court Title of San Diego. They have a solid history of servicing customers with high integrity, white glove service, and value. They also have unrivaled financial strength to back your policies. For all your real estate transactions, call Ty Court Title of San Diego today at 619-260-5200.
Just last year, 429 million people had their identity stolen as a result of data breaches. Face it, your personal information is out there waiting to be hijacked. Identity theft not only damages your reputation, but costs you thousands of dollars while taking you years to resolve. Why take a chance? ID Cyber Center monitors and protects your bank and credit card accounts, social security number, and even your social media. If your ID is stolen, ID Cyber Center recovers your identity so you can live your life with ease. In today's virtual world, not having identity monitoring, protection, and recovery is like driving without auto insurance. Visit idcybercenter.com to learn more. Again, that's idcybercenter.com or call them at 855-829-6097. Remember, it's not just your identity, it's your life.
This is John Feinstein with the CBS Sports Minute, brought to you by the National Association of Realtors. Get Realtor. Alex Rodriguez's tearful retirement announcement on Sunday overshadowed all other baseball stories. But he was not the only star who headed into the twilight this past weekend. On Friday, Mark Teixeira, who, like his teammate Rodriguez, has struggled terribly this season, announced that he would retire at the end of the year when his Yankee contract lapses. Injuries have made Teixeira a shadow of the player he once was. Struggling to hit 200 this season, Teixeira knew it was time. At least he will get a hero's farewell. Tim Lincecum probably won't. The 2-time Cy Young winner, the player so talented he was nicknamed the Freak in college, was designated for assignment by the Angels Saturday. With an ERA of 9.16, this is likely his farewell. A sad way to go out. I'm John Feinstein.
CBS Sports Radio.
Take your mind off summer heat with 15% off special order windows, even installed windows, plus patio and garage doors at the Home Depot. Get a better insulated home for more comfort throughout the year. Plus, get 12-month special financing on select window and door purchases of $299 or more with your Home Depot consumer credit card. New windows and doors are comfortably within reach. Now at the Home Depot. More saving, more doing. Valid through August 10th, subject to credit approval. Terms and conditions apply. See store for details.
Individuals and businesses with tax problems, listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accots, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-446-5681. U.S. Tax Shield, 800-446-5681.
All right, we are back. We're on the air right now talking about predatory lending and how you as the consumer can protect yourself from it. Have a really great panel of experts in here, in my opinion, that are lenders as well, been doing it for years. And I want to get right into where we are now. We've talked about the past and pre-crash. We talked about some of the things that have come into play to protect people, whether it was Dodd-Frank and a couple other things. And now I want to talk about where are we at right now, because I think it's important for people to know what protections are out there and to realize that there are still predatory things taking place. Because in my opinion, not much has changed. Does anybody, and I'm not saying for all lenders, so because it's funny, so what you guys aren't saying, sometimes lenders are like, are you talking about me? No, we're not talking about you guys. But what I'm saying is overall for lending that is still out there, mortgage lending, I personally don't feel like much has changed. I still think people are taking advantage of. It's just more creative and more unique. And honestly, I almost feel like I don't want to use the word that they're being taken advantage of as much as they aren't, the average consumer is not educated enough to realize what's happening to them. So
I believe there's a lot of back end responsibilities on the lender side to make sure that there's net benefit and whatnot. But at the same time, I think that's still a little bit loose as well. So you really have to make sure you educate yourself and you understand what you're looking at. And trying to save $1 and going to a mortgage guy who calls you from a call center and isn't as professional. He's more looking just to read you a loan rather than look at your whole financial package, assess what your goals are, assess where you're at now and where you want to end up, and make sure you put yourself in the right product for that, because it's not always the lowest interest rate to get you there. There might be a better vehicle for you that, offers a low rent, less term, maybe analyze the term that you have, figure out where you're at, because for me at 50 versus for me at 30, I have a whole different plan as to where I'm at.
Well, I think it's interesting that you brought up, luckily before the show started, there's a disclaimer. It's, we do not believe in anything these are just our views. I think you brought up something interesting. You talk about a call center. You talk about a guy that's in a call center just trying to get a deal. And usually that call center was reached by somebody going on Google and typing in, get a mortgage loan. Get a mortgage loan.
And typically how these call center guys are paid are they touch it once or twice and then move it on. There's very little accountability with these types of institutions, these types of loan officers. They're geared to push loans through as quickly as they can. They've got to hit quotas, they got to hit numbers, and if they think they can push it through, that's their motivation. Versus stopping to figure out, asking the question, what's your game plan? What are your financial goals? Where are you at now?
Right.
Those are really important, but it takes time. And they don't have time.
And we have to admit, right now in our society, I would say we're an instant gratification-based society in a lot of regards, right? We are tech-based, online-based, and it's easy for somebody. And just so you guys know, we are not mentioning any businesses, but to just go online and type in, get a mortgage loan now. When you find some of these bigger institutions, it is a conveyor belt. It is almost like a puppy mill. They're just cranking out deals and trying to just crank out deals, as opposed to looking at the individual consumer as a person and looking at them individually. In my opinion, individually. So if we know that, let's just say right now, we know that to be truth, right? Let's say amongst the four of us, we know that to be truth.
Mm-hmm. I do know it's to be true because I just got a call Friday from a past client, or she's a current client, but she said, Randy, I'm getting calls from that I should refinance. And I said, no, you've got a really good rate. You're going to be paying the upfront mortgage insurance premium from FHA or a streamlined portion of it. And I said, they don't know your situation.
Right.
They don't know they probably don't even know your interest rate. They're just calling to see if they can get you to say yes.
They just want a deal.
And then they'll reevaluate it. And then down the road, they'll probably say, yep, you're good where you're at. Don't bother.
Right.
Or they may not even call you back.
It's almost like
or they
right
might
now,
just do the loan.
Yeah, absolutely. I mean, right now on the investor side, since that's really where my heart is, investors are going out and they're putting bids on properties that are on the MLS, on market, and they're purposely overbidding just to lock it up, and then going back and trying to renegotiate so they can get a deal. So I almost feel like that's kind of what's happening.
That's a very good example of, because they don't know the situation, what they, how long have they had the loan or whatever, and it's just not. I mean, yeah, they might be able to save 0.25% because the rates dropped, but is it really going to benefit you that much per month?
Right. Okay. So since we've covered that, now we know it to be truth. We know it's the truth, right? Great. So Joe and Sally are sitting at home and like, we want to buy a house. We need a mortgage loan. And with the way our society is built right now, you jump on Google. Mm-hmm. It just kind of is. You jump on, or whatever your special search engine is. I'm not trying to.
And that's fine to do that.
Right.
They could do that, but they have to, do their due diligence, and especially if they're young.
So what is that? And that's what I want to know. So instead of talking around it, what is the due diligence? What should a consumer do to say, you know what, I want to find the right loan. I want to be working with a person that's going to take care of me because I listened to Chris and Josh, I listened to them, and Randy and Steve, and they said I shouldn't just jump on and blindly do something. So what do they do?
Well, I think first I call it an affordability index. Every family has to have an affordability index. They need to know what their budget is and how far they're willing to push that number before it cramps their style. All of a sudden, lifestyle's affected. I mean, this is as close to a marriage that you're going to encounter. 30-year, you're locking it up. It's going to change your life. It's going to change your budget, your cash flow. So you need to own that number. Mm-hmm. And before you talk to anyone, you don't even need to talk to someone. You just need to know how much can we budget towards housing. They're already paying rent currently.
Right.
Can they afford it? If they say, absolutely, we can afford it, this is easy. In fact, we could probably even go up another $500 and be fine. Okay, right. That's the starting point where they get to take control of the process and say, guys, professionals, real estate agent, lender, this is what I can afford. How much will this buy me?
So how do so they get to this point, which I think is awesome that you bring that up, because I think that's 100% perfect. They get to this point, and I know there's some programs online where you can go out there and they say, yeah, you see the commercials, if you jump on here and you show what you want, we'll shop it around for you and get you the best deal. I find that interesting because I know the truth with lending. Any one of you guys, you have to compete. You have to compete, because if you don't compete and provide them the best deal, what happens?
Well, there's a few things that happen. One, if we're a referral-based business, we get the wrong reputation, and that's not good for future business. But then two, we've got this wonderful 6-month post-closing rule that's in place, is if that loan gets taken out, the secondary market takes 100% of our commission away.
Right. So when you say taken out, just for the person that's driving down the road and they don't really, they aren't lenders, what exactly does that mean?
It means all the work we did. Oh, the takeout part?
Yes.
It means if they refinance or sell that home within 6 months, we lose 100% of our commission, whether we've given that consumer a huge credit. I mean, sometimes we're giving thousands of dollars away.
Right.
That's what's expected in our industry. If we do the loan for free and even give them, say, $5,000, that's getting taken away too.
Right.
So it's important for us to stay competitive so that when the loan does close, they still have a good rate.
Right.
where they start getting bombarded with emails.
And they
with,
do. They get
with
targeted.
mail.
People are going to
Absolutely.
start getting targeted.
You know, fortunately, we've only had 2 in 10 years.
Right. And it does happen. And actually, one of our past clients, Josh, you actually did the paperwork on them.
Yeah.
And you know, we're getting ready to start a commercial, but we're going to talk about it for a couple seconds. So what happened there? Because I think, in my opinion, after I saw the paperwork and we talked to our past clients, I'm like, wow, man, they got took. In fact, they're paying the same amount of money. In fact, they're paying more money.
No, their
because they
payment
got
went up
charged.
$26.
Their payment went up, but they feel like they're like, oh, well, we saved $200 a month. And I'm like, no, you didn't. You actually are ending up having to pay more money on your loan, and in the process, Josh, you ended up they're asking you on the secondary market for you to give up all your commission.
Yeah.
When you took care of them.
And I think that's partly why we're talking about predatory lending today, is because, I mean, I haven't seen a whole lot of this recently, and this is a perfect example of illegal loans still being put in place through call center type environments. Their loan went up $8,000, their payment went up $26, and their rate dropped less than an eighth.
Wow.
And
to me, that's
and they
just
were
illegal.
convinced, and as of 2 weeks after it closed, that they were getting a $200 savings on their loan.
But they're not. So what are they really getting?
A bad deal.
They're getting a bad deal, and at the end of the day, they got charged to basically pay a bigger tax fee at the end of the year.
Yeah. So the only savings was an adjustment in their property taxes.
That's it. So they saved $200 a month, but really they got to pay all of it anyways, and they got charged to do that for them.
Yeah. So rather than having escrows save this money, now they have to save it on their own. But they thought it was a true savings, and they got hosed, and they didn't know about it. And
now you're getting hosed.
And now we're getting hosed. I was hoping they got a good deal, and it would just be between us and the secondary market. But this is a clear case of predatory lending, and it's unfortunate.
It is.
And it happened within the last 30 days.
Man, that's just wild to me. So definitely when we come back, I want to talk about what we didn't get to was, how do people find guys like you? I know how to find guys like you. That's why we work with you. But how do people find quality lenders that, won't take advantage of them? How do you do your research to qualify a lender to make sure that they're going to have your best interests at heart? I think that's extremely important. And I think that's the number one thing that needs to be talked about. Because in my opinion, a lot of people aren't educated. They take the easiest path. And sometimes it's not even the easiest path. It's just that's all they know. Because I tell our team on the real estate selling side, if we put this up, that's what people know about real estate agents. Is it? In my opinion, people don't know anything about buying or selling a home until they start thinking about buying or selling a home. They don't study this like we do. So why would they know? So they run into a real estate agent, whether they just met them or they knocked on their door or whatever else, and they're like, well, yeah, I guess you're just like all the rest. They run into a lender for whatever reason, they're like, well, I guess you're just like all the rest, or I'm just going to jump online. It's all the same.
Well, it's the same thing with going from real estate to lending. I sold real estate for 15 years before I got into lending, and I thought I knew everything about lending. I also bought and sold, 7 or 8 homes by that point too, and still thought I knew everything about lending until I got into lending and realized, whoa, there's a whole lot I don't know about.
Yep. So we're going to go ahead and talk about that after this commercial. Definitely got to get on here and pay the bills. All right, folks, stay on. We're almost done.
Tycourt Title of San Diego is the next generation of title companies. They offer their clients the most complete real estate services in the nation. They have 4 convenient locations in the greater San Diego area to service all your residential and commercial transactions. Tycourt Title of San Diego offers you title and escrow solutions. Whether you are buying, selling, or refinancing, they have you covered. With over a century of experience, you can count on Tycourt Title of San Diego. They have a solid history of servicing customers with high integrity, white glove service, and value. They also have unrivaled financial strength to back your policies. For all your real estate transactions, call Tycourt Title of San Diego today at 619-260-5200.
Alliance Escrow, the most reliable and hardworking escrow team in San Diego. Buying, selling, or refinancing a home can be a stressful event, and our friendly staff here at Alliance is ready to make your home buying or selling process as smooth as possible. We strive for outstanding customer service and are very dedicated to giving top quality service to each and every sale. Alliance Escrow will provide a special discount to active and reserve service members and disabled or retired veterans as well. Whether it's residential, commercial, bulk business, or refinance, call Alliance Escrow today and let us help you close your deal as seamlessly as possible. Call 619-609-0015 or go to www.allianceescrowinc.com today. That's 619-609-0015 or www.allianceescrowinc.com. Alliance Escrow, your partners in real estate.
Hi, I'm Philippe Heller with the Real Estate Inspection Company. When buying real estate today, it's more important than ever to have a thorough home inspection to protect yourself. When quality and experience count, contact the Real Estate Inspection Company. We're the largest home inspection company serving San Diego for 10 years. After checking hundreds of items throughout a house, we provide a detailed, computer-generated inspection report. And we use the newest and best infrared thermal imaging at every inspection 7 days a week. Check us out at sdinspect.com. That's sdinspect.com.
Go to Fuller Honda. They are there to help make your Honda dream a reality by bringing you an excellent selection of new and used Honda vehicles and great service to enhance your ownership experience. Their friendly, experienced staff will be happy to respond to any questions you may have about sales, service, or parts. Fuller Honda has the whole lineup, from the Accord to the Civic to the CR-V to the all-new Pilot. They have the right vehicle for your family. Best of all, this new Honda lineup features some of the best fuel economy on the market, along with contemporary styling at affordable prices. Stop into Fuller Honda today, and they will exceed your expectations from test drive to delivery. Their professional sales team is committed to a no-pressure, high-integrity approach to your ownership experience. Think Fuller Honda. Great prices, great selections, and great deals, where they've treated you like family for over 60 years. Auto Park Drive off the 805 in the Chula Vista Auto Park.
ASI. My air conditioner was old, so old. It didn't make my house too cold. And so I called up ASI. And now it's cooler in July. It cost me $7 a week. $7. For $5 more, I'm getting heat. ASI saves me energy. I'm living more efficiently. ASI, the white glove guys. 1-800-481-COOL.
It starts with the tires. Add in the pilots.
San Francisco Tower, clear to land on 29er right.
Flight 232, clear to land 29er right.
150 sleepy passengers homeward bound. Descending through the clouds, flaps full, gear down. Runway in sight, where the rubber meets the road. And touching down. Those Goodyear tires. Everything we learn making tires for commercial airliners inspires what we roll into yours. Go to Goodyear.com to find the right tire in store for you. Goodyear, more driven.
Okay, we're back. It's crazy how fast the time goes, but it does. I can't believe we're already almost done with this. So, one of the things I was leading to right before we got off was, how do you find a quality lender? We're not going to have a ton of time to get through that, but this is what I can tell you, folks. The guys that I have in here with me today in the studio, they are quality lenders. I've worked with them. We closed deals with them on the retail side, which is buying and helping people buy and sell homes. We've closed deals with them on the investment side. And, I think instead of spending another hour talking about how to find them, we're just going to kick right into it. I'm going to say, you know what, you need to call these guys. So, Josh, tell people, how can they get a hold of you?
Yeah, I'm the president of Sprint Funding, so sprintfunding.com. And I would just say, even for these guys here, shop local. I mean, there's a lot of good loan officers. There really are, and our reputations are on the line. So it's important for us to provide a good service. The online guys, they come and go.
Awesome. So what's your phone number? What's your email address?
Yeah, josh.c@sprintfunding.com, 760-415-1452.
And guys, I love Josh. I've been working with him for a while, so I would say definitely give him a ring. Look up sprintfunding.com. Randy?
Same thing. I would go with local or somebody that you trust. And you could reach me at 760-580-0690. Unlike a lot of loan officers, that is my cell phone number, and I answer it on weekends after 10 o'clock.
That's rare. You answer it on the weekends?
Yes, I do.
Well, I'll tell you what, Josh does too. So I would love to have one other guy that I could say, hey, he's gonna answer the phone when I actually call him. I was
talking to a realtor last night at 10 o'clock. So
hey,
yeah.
Good for you. So, you're a rarity.
Yeah, and you could find me at randyvanorden.com.
Wonderful. And Steve?
Yeah, my name's Steve Christian. I'm the branch manager at Freedom Mortgage in San Juan Capistrano. And you can find me at stevechristian.com. You can learn a little bit more about me. I've been in the business for 30 plus years. And this is more of what I do. This is who I am. So
awesome. Hey, folks, thank you so much. Like I said, I'm sure you were excited about having Ron on the air today. But you know what? I did the best I could. I hope I brought you some value. So again, I'm Chris McCullough. You can look me up online at KSA Kris, Chris with a K, or Kim Steel and Associates is the business steel like the metal. You can look us up online. Thank you very much, everybody. We appreciate you. And you know what? Always look out for yourself. And we're always going to do the best we can to protect you if you come our way. Thank you very much, San Diego. Have a good one.